Heyo, happy Monday. Oh, how is everybody? How was everyone's weekend? Lighting's a little dark. Which side? This side? Y'all can see I'm in my home office today. I usually go to the office on Mondays and Thursdays, which also happen to be the days that I go live with you guys. But this morning, so here in Colorado, it was 36 degrees this morning. It's going to be maybe 60, maybe, I don't know. Doesn't matter. It's going to be like 70s all week, 60s and 70s. But this morning it was 39 degrees. So I didn't want to get out of bed. I finally got out of bed. I went to get ready. I started getting ready. I went to I went to change out of my sweatpants into real clothes. And I just didn't want to, guys. I just didn't want to take off my comfy sweats when it was all chilly in the house and chilly outside. So I didn't. Nor could I go. Normally I'm okay going out in sweatpants, but these were like covered in dog hair because I had slept. So I didn't. So I am coming to you live from the basement of my house. And I think just, as we always, we just kind of shoot the breeze as we wait for people to log in. When you get here, say hey. But I think you guys, so I just, as we're kind of talking, waiting for people to get on, kind of talk about that. I want to kind of talk about routine versus rut real quick. Because I am a creature of habit. I am all about routine. All right. Routine is what maximizes my productivity, right? So I'm all about routine. But when your routine gets to a point where it's a rut and it's actually, the thought of doing something is preventing you from doing it or being productive or whatever, then it's time to switch it up. So a lot of times, I don't know about you guys, but for me, a lot of times this comes with exercise. So let's say you are a runner, right? And you're like, I am going to run every day, that's how I'm going to exercise. And so you do that for a certain amount of time. But then at some point, you're just like, I just don't feel like running today. So you don't. But then you don't do anything, right? And then that cycle happens. So you were in a rut from running and now you're not doing anything. So instead of like not doing anything, it's like, okay, maybe today, maybe we need to start yoga, or let's hit the weights, or maybe it's just a walk, whatever it is. I just wanted to say, like, don't let your routine become a rut and prevent you from being productive, because that is something I have spent forever fighting. Because like I said, I am such a creature of habit, so into my routines that I need them to be productive and I need them to get work done and I need them to do all the things, right? But when you get to the point where your routine, you're dreading it so much that you don't do it, then we gotta revamp. So that was just about what today was. So today I just didn't want to go to the office like I normally do on Mondays, so I didn't. So that's that. I also did not feel like I'm in a sweatshirt and I threw on a hat because I didn't want to do my hair. So hopefully y'all recognize that the message I'm telling you is more important than how I look when I do it. So when I give it to you. So hopefully you guys have learned that by now. It is a little dark down here. I don't know what to tell you. Let me see if I can turn nope, that's down. Size light goes. All right. So anyway, let's go ahead and get started. It's just about that time, right? If you're here, let me know you're here. Say what's up. Let me get this going in the bottom corner. I think my StreamYard comments are working now. I still get a little paranoid that I don't see them. I don't know why. So let's get that going. Where am I? There I am. All right. So we are in the middle of our 3-part series on retirement. Our retirement series. That's the word I'm looking for. So we're going to jump into that, but let's see. So, okay, cool. So I think we're good. I'm going to go ahead and get started. So happy y'all are here. If you don't know me, I am Bree Beers of Bree Beers and Associates, formerly Lipa Beers and Associates. I am a CPA, and our goal at Bree Beers and Associates is to enlighten taxpayers and business owners on all things accounting and tax. We understand that y'all don't know what you don't know when it comes to taxes and being a business owner and finances and all the things. So we are dedicated to creating all the tools we possibly can to help shed some light on that unknown. So one of those tools is our awesome Facebook community, Money, Taxes, and Finance for Small Business. If you are a business owner and you are not watching us in that group, please go over there and check it out. It is an amazing and supportive community where we post daily tips and tricks, and then we provide multiple live learning events each week. Mondays, right now, 9 a.m. Mountain Standard Time is our normal live training sessions. Are our normal live training sessions. So this is where we talk about the topics you guys are asking us about most often. And then on Thursdays at 2 p.m. Mountain Standard Time, we go over updates from the past week and we open it up to live Q&A. So if you ever can't make a live training or you want to go back and find a past training, all of those lives are in the videos section of the Money, Tax, and Finance for Small Business Owners Facebook group. Or you can head on over to YouTube because we've started streaming them there as well. So you can watch them there. It's a little easier to search on YouTube for past trainings. Just my 2 cents though. All right, so like I said, today is part 2 of our retirement series. So during this series, we're going to look at a variety of different retirement plan options from both the employee and the employer side. Because again, business owners, I want you guys to know what you're doing from that point of view. And we're looking at them, you guys, from a high level in a tax-oriented view. So last week we talked about IRAs. Got to preface this right here that I am not a financial advisor or a financial planner. I am a CPA and I am a tax advisor and a tax strategist. So I am, again, going to look at all these various options from a tax perspective and a very high level. I suggest, you know me, I am all about hiring people to help you in the areas where you are unfamiliar or uncomfortable with. So get yourself an awesome financial advisor. I have a few who we partner with that I'd be happy to refer you. And a pro tip right out of the gate, if you listened last week, I'm going to tell it to you again. If you have a financial advisor and you have a tax advisor, make sure they know that they each exist. Okay. We try so hard to build relationships with all of our clients' financial advisors, or we recommend to our clients that they work with financial advisors that we work well with, because that relationship is so important. Because your financial advisor and your tax advisor don't inherently have the same goals for you, right? Your tax advisor is just trying to minimize your taxes and help you there, and your financial advisor is trying to build your portfolio based on your retirement goals. And so those two things may conflict. So if you have a team that works together, they can do this together and make sure you're attaining all of your goals. So, all right, that's it. And not a rant, but let me get off my soapbox. So today we are talking about 401ks. We're going to talk about 401ks and solo 401ks. If you watched last week's training, it's kind of going to be nice to kind of know what we talked about last week and listen this week and see how they compare and contrast. If not, don't worry. I'm trying to treat today just as its own independent training. So we'll get there. So let's start with the 401ks. So with a 401k, you guys, when we think of this type of plan, we're usually thinking of it from an employee point of view. There are not a lot of small businesses that do 401ks. Most small businesses that I work with do some form of 401ks. I'm sorry, some sort of IRAs. And we'll talk about a little bit about why that is. But again, this kind of goes into your financial advisor side of things. And I'm really going to try to stay high level and stay tax oriented. So when we think of 401ks, about them from the employee, I work for a business, right? 401ks are super common, especially if you work for bigger companies. All right. And with a 401k, the employee can defer up to $19,500 of their compensation. That's the 2020 number to their 401k. So what that means is if I make $100,000, instead of having $100,000 in taxable income, if I defer $19,500 of that, that's like a tax deduction. They're pre-tax dollars. All right, so that reduces my taxable income. And it's a tax benefit in the year you're making the contribution. Okay, we call those pre-tax contributions. So if you make a $5,000 contribution this year, then you're reducing your taxable income by $5,000. If you're making that max $19,500 employee contribution, deferral, then you're minimizing your tax or your taxable income by that 19,500. Sorry, I saw a shadow, I believe, of my child walking. So squirrel. Nope, go upstairs. Got to talk to your dad.
I want to know. There's a sign that it's a media recording.
You need to go. Sorry, guys.
And it's on a big monitor.
You need to go talk to your dad. Do not talk to me again, please.
Okay.
We made a deal, dude.
Sorry. It was urgent.
Sorry, guys. I let him stay down here, and I was like, do you promise that you will not talk and you will not interrupt? He's like, I promise. I promise. I knew. I'm like, shouldn't have done that. It's fine. We're good. Just so you guys know, when I'm not on a live, I help my kiddos. All right. Just not my day. It's Travis's day. Anywho, back to 401ks. Excuse me. So pre-tax dollars, right? So they're a tax benefit in the year we're making them this year. And then when you take that distribution, when you retire, when you start taking money out, then the principal and the interest are both taxed at that time. So tax benefit now, all of it's taxed in the future. Okay. And so there is also a Roth 401k option. It's much less common. You don't really see the 401k or the Roth 401k options a lot offered by employers. I think it's because it's an additional administration fee to administer, but it is there. So if you work for if you have a 401k option, I would suggest asking your employer if there's also a Roth 401k if that interests you. Because remember, Roth, whether it's a 401k or an IRA, a Roth is not a tax benefit now, okay? It's using post-tax dollars today. But in the future, when I take out my principal and my interest, it's all tax-free. All right, so when we talk pre-tax contributions, like 401ks are a tax deferral tool, right? We're just waiting to pay the tax till we retire. A Roth 401k or any sort of Roth 401k or IRA is actually a tax savings tool. You can actually save taxes in the long run because that interest is never taxed. Okay. So now let's talk about 401ks from the employer side. So employers can match 401k contributions. The average matching in 2019 was 3%, and the most common matching type was 50 cents on the dollar. So what this meant is that most employers were saying, employee, if you contribute 6% of your compensation, will contribute 3%. Okay? Keeping in mind that the employee contribution is maxed at that $19,500. I did not note this. I forgot to tell you guys that if you're over 50, you do have a catch-up contribution you can make of an additional $6,500. All right? But for those of you under 50, it's at $19,500. And then the employer can contribute up to whatever they've agreed to. All right? And the reason, you guys, that we don't see a lot of 401ks in micro businesses and smaller businesses with 3, 10, even 20 employees is because the administration fees for 401ks are higher than they are with the IRAs we talked about last week. So this is the most significant reason why small businesses tend to go with the IRAs. Again, this is a topic for your financial advisor. I believe the 401ks and the IRAs also, you're able to invest different ways into their different vehicles as well. So definitely a question for your financial advisor. And so 401ks are great for those of you who have employees. All right. And again, usually bigger, a little bigger on the business side. So I want to get into now our solo 401ks. Okay, so solo 401ks have become really popular, at least with my clients and the financial advisors I work with over probably the last 3 or 4 years. I've really seen them starting to blow up. And so I want to start so solo 401k, sometimes you hear the term individual 401k, one participant 401k. These are all interchangeable. There's one type of solo, individual, one participant 401k. All right. And this type of plan is only for those small business owners who have no employees. As soon as you hire one employee, You can't do the solo 401k anymore. The SEP and the SEP IRAs and the other IRA options we talked about last week, perfect for you guys. But if you have any employees at all, you no longer qualify for this solo 401k. The one exception to that rule is if you have a spouse who works in your biz. Okay, if you have a spouse that works in your business, you can still do a solo 401k as long as it's just you and your spouse who are the only employees in your business. All right. So with a solo 401k, contributions are made by both you as the employee in your business and the employer, your business itself. Okay. And this is true even if you're a Schedule C, right? We talk about this, our sole props and our single member LLCs where you're not really on payroll, but you're still considered an employee within your business. Okay. So there's an employee side and there's an employer side. So the cap on the combined contributions from both sides for 2020 is $57,000. That's pretty significant, right? That's a lot of money. So how this $57,000 cap is made up. So the individual deferral, meaning the taxpayer, the employee side of that contribution, that max for the solo 401k is the same as the regular 401k. Okay, it's $19,500 with that possible catch-up contribution of $6,500 if you're over the age of 50. Sorry, my nose itches. Always. All right. But for the employer contribution on that side, so on the employer contribution, you can make up to a 25% contribution based on your compensation or your net self-employment income. What that means is, so if you're an S Corp, that's 25% of your W-2 wages. If you're a sole prop or a single member LLC, then that's 25% of your net self-employment income when your tax return. Okay. So the employer contribution, you guys, is a deduction to your business's taxable income. So when we talk, I told you I'd talk about from a tax perspective. So from a tax perspective, you're getting the pre-tax dollars on the employee contribution of up to that $19,500, which that is not salary. As long as you have $19,500 in compensation on the individual or employee level, you can make that full deferral. You have to at least make that much, right? And then if you actually make more, if you have more than that 19,500, then you can make this 25% employer contribution portion. All right. Just the two combined cannot go over that $57,000 total in 2020. That number adjusts every year, goes up just a little bit every year. So there are a few rules for the solo 401k, you guys. So employee deferrals must be made by year end. That $19,500 employee deferral got to be made by year end. But the employer portion can actually be made up until you file your tax return, similar to the IRAs we talked about last week. All right. And part of that reason is because you don't actually calculate how much you can make or you can contribute from the employer or business side until you file your tax return, right? So you get until you file your tax return to make that employer portion, that 25% business deduction portion. All right. So that is the gist. If you guys have any questions, now is a great time to ask them. But the solo 401k, you guys, fantastic for those of you that do not have employees. All right. So only available if you have no employees. But if you're looking for ways to contribute to your retirement, right, and you don't have any employees, boom, 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 solo 401k is a great thing to talk to your financial advisor about. The one thing I also want to note is the solo 401k, you guys, does, based on my experience, and again, question for your financial advisor, but has those administration fees are a lot less than if you have a traditional 401k where your brokerage house has to pay administration fees for multiple employees. Okay. So next week, you guys, I don't see any questions, so we're good. So next week is part 3 of the training, of the retirement series training. And it's called Get Creative. But what we're going to do is we are going to compare and contrast these IRAs and these 401k options. And I am working on a chart, like a graphic for you guys to just kind of outline a little bit, at least from a tax perspective. And again, high level, big picture, what these differences are. So you have a little bit of background before you go talking to your financial advisor and they dig into which one's right for your business. Okay. We're also going to discuss just a few other options to get your brains thinking about about how you can maximize your retirement contributions and the tax effects that those are going to have. Okay. So next week, get creative, right? So just my normal end of the day announcements. All right. So one more 2019 tax deadline for those of you that still have not filed your 2019 individual tax return. That includes those of you with a Schedule C for your business. You have until October 15th. All right. Today is September 28th. So you have just a couple weeks left to get that filed. As I remind you every week, even if you cannot pay your tax liability, all right, get your return filed, because the failure to pay penalty is 0.5% a month. The failure to file penalty is 5% a month of what your balance is when you eventually file. Okay. So even if you cannot pay your balance when you file your return, please, please, please make sure you get your return filed by October 15th so you can at least minimize your penalties that are involved. All right. We are past our deadline to get your documents into our team to ensure timely filing. We've got enough to keep us busy until October 15th, but there's still plenty of opportunities to work with us if you want to. And that's for 2020 stuff. So 2020 tax planning is going to begin in November. So if that's a service that interests you, you want to talk about making sure you have enough tax paid in for the year. You want to get an idea of what your tax bill is going to look like. You want to talk about ways we can reduce your taxable income, all the different things. All right, then you definitely want to make sure you're on our email list, and those details for tax planning packages and scheduling for tax planning and all those things will start appearing next month, October. All right. And then one last reminder that if for my PPP and my EIDL borrowers out there, we don't forget we have our personalized PPP strategy sessions at our, I don't have a real name for it, but full service PPP forgiveness application completion services for those of you that are not quite the DIYers. All right. So if you have PPP and you're sitting there, and maybe your banks are telling you that it's time to apply, maybe you're getting toward the end of your covered period and you haven't spent your money, maybe you're not sure when to spend the rest of your money, whatever questions you have, come talk to me. We'll figure out which tool is right for you guys, if it's the personalized PPP strategy session or the full service forgiveness application service. So that's it. I'm done early. That's weird. But let me know. So Thursday, I will see y'all Thursday. That is our updates and Q&A session. And make sure if you guys have questions and you can't make it, feel free to post them in the Money, Tax, and Finance group. All right. That's where we will get the questions from to answer. And if you can join live, I welcome you to do that. It's always fun. So I will see you guys on Thursday at 2 p.m. Mountain Standard Time. Have a fantastic week, you guys.